What an absurd news cycle today, with rumors that Trump was going to fire Powell, and then not fire him, and then there was a drafted letter, then there wasn't a drafted letter. It was pretty wild. But it does paint a clear picture of what would happen if Trump were trying to enact this in reality. Equities would crash, the dollar would crash, and of course yields would skyrocket, basically the exact opposite of the intent to lower rates. Now, CPI and PPI did come in line with expectations, but it's not like there's no annualized inflation. Core year over year still came in at a 2.9%, almost a full percentage point over the Fed's target. And amidst all of this, if there were any time for the sellers to have a catalyst to latch onto and really drive downside momentum, it just wasn't there. Sellers completely failed to do anything meaningful to the downside today. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 5 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight on the SPY daily time frame chart, and amidst all of this volatility, we should just ask ourselves a very basic question: what is going on with the daily trend? Is it up, down, or neutral? Certainly we have lows. This is a firm higher low because the hourly chart did flip into a downtrend here. I would consider this a soft higher low. It was a very short-lived hourly downtrend, if you even want to call it an hourly downtrend, and I would really call this a sideways balance range up here. That's the exact term we used in the Saturday update video. Markets move from periods of consolidation or balance to range expansion or excess, and then back into balance and compression. We're certainly in that phase of compression, but we are still in an overall uptrend, noting that on Tuesday, via the gap up, we technically made a brand new all-time high. So is the trend up? The answer is absolutely yes. Is the trend down? The answer is absolutely no. In the short term, on the hourly chart, we might define this as a sideways neutral trend, more of a balance than any sort of up or down trend, but it's not bearish, I think, is the bottom line here on the daily timescale. If we start reading into the candle structure here as well, notice that today's daily bar looks firmly underneath the Tuesday low. You can clearly see a candle by candle lower low. It makes an equal low to what we had in the earlier stages of this balance, the soft higher low as we've dubbed it, at 618.50. And then where do we close the daily bar? This is the most important part from the daily timescale. We close back inside of Tuesday's range. After Tuesday ended up being basically a bearish engulfer. We completely failed to continue the breakout over the top end of the balance range here. There was no gap fill reversal. It closed dead weak right on the lows of the Tuesday session. So you would think if there was ever an opportunity for sellers to really capitalize on this momentum, it should have been today. Breaking down underneath 1, 2, 3, 4 equal lows, all the sellers had to do is accomplish a daily close underneath 621.75, but that clearly did not happen, and instead, the buyers now have the gift, basically, as we call it, and towards the upper third of the balance range, will be open-minded to daily higher lows happening here, or just straight-up breakouts happening over the top end of the range at 626.65, and this higher low zone is 621.75. We can see this very clearly on the hourly chart. Let's take a closer look over here. On the hourly chart, let's zoom in even further. Here we go. This is our failed gap up on the NVIDIA H20 news overnight headed into Tuesday's open. You can see that in the picture perfect world, let's just play devil's advocate, buyers would have ideally wanted some sort of reversal over the top end of resistance and resistance from back here. Did that take place? The answer, of course, is no. So the next best place for a higher low would have been a gap fill reversal here. It worked for about, maybe 15 minutes intraday on that Tuesday morning session, and then we ultimately broke down into the afternoon. So that's strike 2. Buyers not really providing the higher low over the top end of what could be considered a 2-day balance range here, Friday and then Monday of this week, and we close week on Tuesday. We've gone over this. Then once again, what becomes the next step for sellers? If you're a seller, how do you want to see this chart develop? You want to see a breakdown through these 4 equal lows, 1, 2, 3, and then 4 Tuesday's low, a break through it, a lower high underneath it at 621.75, pressure 618.50, and that's where we basically talked about on Saturday how ultimately if we crack this level, it wouldn't be unreasonable to go down towards 613. Why 613? Because back on the daily time scale, if we just throw on our daily 20 SMA, there was going to be loose confluence with the 20 SMA. Now, did we even make it there? The answer is no. And once again, we can clearly see that the sellers failed to yield any kind of lower high underneath what could be considered overhead supply, right? You could draw in this box from here, starting really on the, that have been Wednesday session of last week. All of these traders, hypothetically, were trapped overhead supply at one point during today's session when the market broke underneath 621.75. If we had stronger sellers, number one, momentum sellers would have battled for that lower high here, but you can flip the script as well and read into this from the long side perspective. If longs were really nervous about being long from this location after the break here, you would think the easiest place for a long to take a break even is selling towards the bottom end of the overhead supply. Oh, I'm long from these lows. Let me just sell here for break even. Oh, I'm long from these lows on Monday. Let me sell for break even. Oh, I bought the dip on Tuesday thinking that the market would bounce. Let me just sell for break even. Again, the question becomes, did we see any, did buyers step up to sell for break even into the overhead supply? The answer to me is absolutely not. So all of this combined basically tells me that the base case as we walk forward into the end of the week will either be, as we mentioned on the daily, something that looks like this, retargeting 626.65, or consolidation here, that then Brigade bolts into blue sky territories over 626.65. So your new key level is 626.65. Obviously, that's your upside unlock for blue skies. 624.65, the lower high intraday from Tuesday, and also today's high of day, actually. And we also have this new key level. It's not new, but it's just the bottom end of the range really being reinforced, now giving the opportunity for an hourly higher low in the trend count. Right, because the hourly trend is certainly neutral in this box. If we just go back to basics, we have lows, we have equal lows. We have highs, we have equal highs, and basically equal highs up here. So if we're going to start developing an hourly uptrend, the first step would maybe be to try to attempt some kind of higher low here. If that doesn't happen, let's play devil's advocate. If this is going to turn into a lower high, if we do get consolidation here and then break underneath 621.75, then absolutely into the end of the week, I would start looking for another reattempt at 618.50. It's not like this trade is off the table, but given all of the evidence that I can see and such a severe reaction from the low of day today back over this level with no hesitation on the move back above, I would tend to think we don't have stronger sellers here, and we have much more confident longs who are willing to hold these positions from what would have been overhead supply. So that's the analysis here on the S&P 500. Once again, if the market is going to flip bearish, that is fine. On the daily time scale, I would be more worried about that. If we get something that comes here, right, we target this, and then if we break 618.50, that's where the daily starts to really change my mind, because now we're underneath what is just very clearly a balance range with literal equal lows instead of lows, higher lows, right? Up until today's session, we technically had higher lows happening here. So 618.50 needs to break down if stronger bears are going to get involved on this daily time scale. And if it does take place, we're still looking for longs off of the daily 20 SMA, off of the previous all-time high at 613 anyways, lower edge of the weekly expected move. If that's not enough, let's go ahead and come in here with the anchored VWAPs intraday, because my oh my, was this a thing of beauty, right? If you were watching this intraday, look at this. Perfect right off of the zone. These anchored VWAPs, FYI, come from, we don't need that much zoom, but the original ceasefire gap and go, that anchored VWAP, perfect support right there, 618.50. Beautiful, right? You could even come in prior to the gap up when we mainly had that major trend reversal higher. You could call it a break of the trend line back here. So if you anchor to that morning, you can certainly see that that's also just a hair underneath. So again, does it really make sense to be a big aggressive bear, considering everything we've talked about thus far being over the anchored VWAP stack? And also, if we come in with the fibs from the bottom to the top of this most recent leg, there's your 38.2, right on the money, 618.50. So, I mean, it really doesn't get much better than that in terms of a technical story, aligning with just a flurry of headline volatility, not really enticing new money sellers to get involved in this market. If we take a look at the market internals, if you're not familiar with the internals, first of all, check out the video tutorial in the top right-hand corner. But then second of all, we should look at what happened on Tuesday, because Tuesday was the large down day, right? The question becomes, at the exchange level, did we have stronger sellers stepping up? Yes. At the exchange level, there was decent volume outflow. We did end up closing in trend lower zone here on the advanced decline line. The cumulative build was a change in tone from what we've been seeing recently. So again, when we come into today's Wednesday session, would it have been reasonable for momentum sellers to try to capitalize on this sort of setup, if you will, headed into the session? The answer is yes. But look at what happens here. I think this is like so critical, right? Look at the momentum to the downside here. I'm not going to deny that, if you were short for that, then like kudos. You probably made a boatload of money there being short for like, I don't know, a 40-point rip to the downside, right? But look at what the internals did. Did the tick on the cumulative actually go red? No. Did the volume flows get to substantial outflows as that was taking place? No. And I can even hide this study here, the net flows on the week, and show you the actual intraday ratio. So this is a histogram of what these bubbles were saying intraday. At the worst, it was down at -2. -2 to 1 on the NYSE for breadth. Is that like a groundbreaking read? It's not. On the Tuesday session, you were much worse. You're at like -2.5, -2.6, right? A really bad read is underneath -3. You just didn't have that at all as this breakdown was taking place. And even look at the advanced decline line, right? It dips a toe underneath 0, promptly gets back above, right? You could also come in here with the index score, which is, it's my personal favorite. Of course, I built it for myself ultimately, but you could check it out on the site if you're interested. Regardless, during this like peak volatility storm to the downside, did any of these 15-minute candles close with a huge negative impression at -15, anything negative double digits? The answer is no. The worst it got here on a close was -7. I typically start reading into it as substantial when it's negative double digits. We say DD for double digits, right? So you're just not seeing substantial selling pressure here. And once again, it's like more like a flash in the pan than anything else out of the ES and really just the broad market as a whole making that move lower this morning. So we'll keep an open mind, but for now, all the evidence I have in hand certainly suggests that this is a primary outcome to here, blue sky territories. If it's just straight up here, great, we'll look for this. If we do come in underneath that 621.75, we'll be open-minded to 618.50 again, but really not pressing the bet to the downside. This continues to be a market where dip buyers are rewarded and sellers who overstay their welcome get obliterated over and over and over again. Let's go over to the market profile and see if we can learn anything from this perspective. So let's go full screen on this guy. Wrong button. Here we go. Full screen. What do we have on the market profile? Any decent takeaways here? Well, first of all, the E period excess is fantastic. This totally marks the proper end of the auction, and it didn't really repair anything meaningful in terms of structure off to our left. Maybe this low a little bit. We had a poor low back there. That's been repaired. So I like to see that. In terms of the Tuesday session, one thing I would make note of is as we saw the market selling off, right, and we certainly closed fairly weak, look at what happened with value. It's actually in the middle of Tuesday's range. So was it really that aggressive on Tuesday? I think there was an exchange level step up from the sellers, but in terms of value and volume commitment, it didn't definitively shift lower. If you look at where the Monday value is, Tuesday is technically overlapping to up still. Point of control is only mildly lower. On today's session, value is totally in the upper half of today's range, as is the point of control. Once again, kind of invalidating the thesis that stronger sellers really stepped up down here with a lot of conviction. It's just not happening. So I think market profile reinforces a lot of the conclusions we've already drawn. Let's go back over to the platform and let's take a look at our good friend, the NASDAQ. Where are we going? We're going over here. And let's just reset this. We'll take a look at the dailies, of course, and we'll continue this analysis here. So one thing that you may or may not have to do on Thinkorswim, notice my upper wick looks okay right now, but see it? I don't know if you caught that, but now the upper wick is there at the all-time high. You can right-click on this candle and click on correct this bar, the true high of day, and it'll flip-flop back and forth until we actually roll to the next period. But 557.94 is the actual high of day from today's session. So please don't be deceived by this upper wick. We know that the market actually closed kind of right around in here. Regardless, it's the same story as the S&P 500, if not more bullish. Why? Well, because the trend is certainly up. We made a much more meaningful higher high via the gap up on Tuesday morning. And even though we closed back inside of the range on Tuesday, look at where we closed today, back over the top end. So once again, stronger sellers, what would they have liked to see in a dream situation? Well, number one, it's just like, of course, sellers want to see that. But number two would just be, okay, you open here, you get this volatility storm this morning, you set a lower high in the range, and then maybe into the end of the week, you start breaking the range low. Well, we already closed back over the top end of the multi-day range. How many days? 1, 2, 3, 4, 5, 6, 7. 7-day balance range. We closed back above at 557. So I would tend to think that, the base case here is consolidation over 557, over the top of the range. Ignore the wick, but it's still the high in the opening print of the Tuesday session. Brigade bolts over 560.25, just continue to unlock blue sky territories. If we're going to flip to bearish on the NASDAQ side of the market, I don't like, just purely based on the wick that we saw today, I don't like the prospect of shorting back into this range. I don't really like shorting underneath the 551 level because you have this chop from back here. The thin structure really only emerges when you're underneath 546.25. So are we going to wait for this to play shorts? More confident shorts for sure. Is there maybe some scalp, some quick draw McGraw stuff we can do in the meantime? Maybe, but once again, like the S&P 500, I would just reinforce the idea that dip buyers are being rewarded here. Just like align yourself with the context of the market, and 9 out of 10 trades will be far easier than fighting it every single time. So let's go back to the hourly charts here. See if we can learn anything new or different about the NASDAQ. There's really not much here. I would just say rinse and repeat the analysis. If stronger sellers were here, they would have liked to see consolidation underneath this previous balance. That clearly didn't happen. Markets closed even over these highs. You can see that there. So that really only leaves us with a couple of different outcomes here. Either consolidation over 557, as we mentioned, looks like that. Blue sky breakouts over 560.25. If the market comes back down into range, I would use this as a little bit of a gauge at 555, right? We used to have 555.50, these highs from kind of right around in here. We're splitting hairs a little bit, but point being is if you could set this higher low and then pop back above, I would probably long this. I would be a little cautious of buying 555 outright, but it would still nonetheless act as an hourly higher low. So you could carry that forward. Is there really, like I said, is there a big reason to try to short this market? I don't see it. Even like the look above and fail style trades, like if we get something that looks like this, you could be my guest if you want to try risk reward like this, but it's not conducive. Like the only people in my view who would have gotten paid on that short in here were people who were just like arbitrarily short before the news headline actually hit, right? There's just like no technical setup that really would have derived a decent or reasonable short setup in there. So that's my view at least, and that's what I'm going to continue to align with here on the NASDAQ. If it is going to be a short, maybe this is kind of one of these things we can play for. That would be from A to B underneath 549.50. We've talked about this in the past, how this previous low unlocks this. Straight up move back here. Still even cautious of that. And is that a top priority given where we've closed? Probably not. Let's take a look at our intraday anchored VWAPs. You can see that we're still over the majority of the stack here. If we come in with our Fibonacci's, I don't think anyone should be surprised if we do something that looks like this. We're over the Fib 38.2, just like the S&P 500, all set. Beautiful confluence 551, strikes again, bottom end of the range, acting as support. Previous resistance as well, a little bit cleaner than what we had in the S&P, right? Let's jump over to the market internals for the NASDAQ side of the house and see what's going on in NASDAQ land. Huge volume inflows today, less meaningful volume outflows on Tuesday. Nice close higher on the advanced decline line, decent close for the bears. Once again, we're trying to take inventory of Tuesday and Wednesday just to say that bears should have taken advantage of sort of this more bearish change in tone that we finally started seeing given the breakdown, and they just didn't, right? There's just no dice whatsoever. Bears just nowhere to be found in terms of capitalizing on today's session. You've basically undone what the bears did yesterday at the exchange level and some in terms of volume. Let's get back over to maybe the market profile for the NQ side of things and just see if we can learn anything new about this. It's a rinse and repeat. If anything, what I would call out is that the value area on Tuesday was clearly over the top end of the range high, right? Because remember, Monday's high is the top of the range, basically. So this value area break to the upside was much more bullish. I would say if you can see into the end of this week, value get back up and over this area, which is roughly around the 23,075,080 is what we've been using in the morning live streams, right? 080. So if we could stay over that with value, it's a bullish development in the upward direction. As long as value is either in the range, in the consolidation, meaning all of this, or over the range, bullish. And there's just really nothing to do on the sell side of this market until proven otherwise. And once again, that could happen soon, but there's no evidence of that happening right now. And therefore, right, if we're just trading the data points we have in hand, it doesn't really make sense to arbitrarily start shorting something that seemingly is very, very strong. Let's go back over to the Thinkorswim platform here. I'm going to have to keep clicking icons today. My keyboard shortcut is not quite cooperating. Anyways, Spider's Cash. Let's take a look at IWM Cash. We want to go over to the small caps and see what's going on over here. So the daily trend remains in the upward direction. This is technically a pullback from the highest high. The hourly downtrend is absolutely in force. So if this can hold as a higher low, it technically, it's a violation of this. This is a soft higher low. But this, where was really the last hourly downtrend? It's kind of back here. So as a daily higher low, it makes sense. It checks out. It's over the daily 200 SMA. Let's quickly flop on our 20 SMA here. That is working out. Did we also check the QQQ 20 SMA just for the sake of being congruent? Yeah, it's in there around 546.25. Anyways, aligning with the IWM, nice looking hammer. And I would say many of the same things that we've talked about in the S&P and the NASDAQ, where you looked underneath Tuesday's low, closed inside of Tuesday's range, sellers failed towards the lows. You could think of this as having even more overhead supply just based on the premise of, as we talked about on Saturday, the possibility of a head and shoulders here. Now, I don't think we're out of the woods yet on the IWM because there's still certainly an opportunity. There's an argument to be made that the hourly trend is much weaker still on the small caps. And if we reject 221.50, there's still a possibility of a lower high. So that's just something to keep tabs on. Again, I still feel as though, not even feel, given the daily structure and the lack of sellers closing underneath Tuesday's low, the base case would be kind of neutral through here. If we were to Brigade bolt over 221.50, that's sort of more bullish neutral, definitely bullish over 223.25. If we roll over here, that would give me a little bit more hesitation about the bull thesis, specifically translating that to like massive full correlation over in the S&P 500, right? Noting that this would just be an hourly lower high. All right, equal low would become the target, 217.50, if this were to roll over. Let's quickly check in on the intraday anchored VWAPs. Not the volume profile, wrong click, that's my fault. Let's go here. And you could see, again, the cluster starting to act as support. Ideally, if it is going to get fully confluence for our S&P 500, we're up and over something like 223.25. We could look at the Fibonacci's just to be congruent from this point of view as well. It's really the low after the ceasefire up to the highs. Recovered over the 38.2, but getting a little sloppy in here. I would say that once again, probably needs to hold over that 221.50 before I start getting a little bit neutral to bullish, and then over the top end of 223.25 if it's full bore rock and roll for the S&P. If we're underneath today's low, that's the line in the sand from a fib perspective at the 61.8, which does align with that 217.50. I would watch that. If you do get the lower high rollover to here, that would start to become a little bit of a danger zone. I would carry that forward for the S&P 500. So anybody who's like, oh, he's overly bullish, it's, it doesn't, S&P, forget about this guy, he doesn't know, probably didn't make it to the IWM analysis. And if we find ourselves here, I would carry it forward. Again, small bearish data point, not, oh my God, sink the ship S&P, but prevents further clean upside. Will make it more difficult to trade those all-time highs, right? Let's get on over to our Russell side of the market internals. Any big crazy data divergences over here? Nope. Decent inflows, not strong, not up over 125 mil. We did have outflows on Tuesday, to be expected on a day as extreme as it was. And once again, the question I would just pose here, did the sellers find much follow through? Especially after breaking that low, the close here does strike me as being a little bit more bullish. And the answer to the question is no. Sellers did not really find much follow through whatsoever. Let's take a look over at the market profile for the Russell side. And then we'll be done with the broad market. We'll jump into our sectors, of course. We'll see what's going on from that point of view. Let's get a little bit more data on the screen here. Come on now. Here we are. So what you'll notice about the Russell, and why I still think we're not fully out of the woods on small caps, is that the value did move lower on Tuesday. Point of control was lower. It's underneath the halfback, which is sort of the purplish blue line in there. The value area today is overlapping and inside. Actually, it's just inside. The point of control is definitely in the upward direction. We do leave a poor high behind, great excess at the lows. So hypothetically, if this market were to break up and over value area high from the Tuesday session, I would tend to think that thin structure retracement is in store, and we would just be targeting these highs up here closer to about 2275. That ultimately would be more bullish for the S&P 500. So once again, did sellers find follow through underneath Tuesday's range? You could answer this from a volume value area perspective. The answer is no. Even if value was like overlapping to down like this with a point of control here, I'd be a little bit more bearish and say like, okay, Russell didn't really, play nicely with the rebound. But once again, what's the actual situation we're dealing with? Value area is here, point of control is here, previous day's low is here. Sellers, kind of short end of the stick underneath prior day's low. So that's the broad market for us. Let's go back over to the platform. There's the keyboard shortcut. Let's take a look at the sectors here and see what's going on from this point of view as we get back into balance. Weekly performance, who was leading, who was losing, where was the weight? XLK leads the pack, 1.37%, followed by semiconductors, real estate, and then communications. I would say for the most part, this is a risk-on look. Semiconductors leading there, tech leading. At the bottom end of the barrel, it's energy. That's more of a lightweight sector anyhow. Materials, the lightest weight sector in the S&P. Discretionary, it's a heavier weight sector. I would much prefer to see that green on the week, although the technical chart is not bad. We'll take a look at the structure in a moment. XLP, consumer staples, as the fourth runner-up at the bottom end of the barrel. So all up, as the market kind of finds itself back in the balance range after maybe setting some kind of equal low to what we have back here, is the posture aligned with the buyers still remaining in control, or at least some sort of risk on sentiment? Absolutely. I would say it would be a huge red flag if the market basically moved back into this range but was driven by the XLP, was driven by the XLB, if we had these lightweight defensive sectors pushing markets back up towards the highs, oh my God, divergence, watch out. This is not to be trusted, right? But that's not the case. Look at what we have here. And we'll see this in the structural charts. Let's just take a look. I mean, XLK, how can you say anything bearish about this? Gap fill reversal, looked into the Monday range, sellers failed, no lower high underneath, the then gap close, back to the upside, just crazy. So bullish here, looking for follow through in the upward direction. The only time I'm bearish is when this alert goes off. 252.86, so underneath basically Monday's low. If we drop 253, yeah, I mean, maybe it's a heads up to start closing some of these gaps, but look at today's daily bar. It's just not even close to indicating that that is a top priority for the market, right? Let's jump into the SMH. Let's see what's going on over here. Similar story, holding previous all-time high, not taking out the inverted hammer low that we were concerned about last week. So any consolidation up here is still just bullish consolidation, looking for upside. One thing I will say that may derail this thesis here for semiconductors remaining strong, we saw ASML report earnings this morning, and tomorrow morning we do have TSM. So it's, that's a funky looking S. We do have TSM. It's not something where I would say like, oh God, we should be short ahead of TSM's release. But if TSM comes in and says like, whoa, let's just say what ASML said, we don't know if we can predict full year growth for 26. If they give soft guidance like that from TSM, noting that obviously TSM is the main manufacturer of all these chips, then you probably have a little bit of a headwind in this like bullish, euphoric sort of tone that I'm probably putting a little bit too much spin on here this afternoon, probably goes away a little bit. So in terms of the reality of the situation, probably a lot hangs in the balance of where TSM earnings come in tomorrow morning. We'll keep an open mind to it, but for now, at face value, this chart does strike me as bullish. Let's move along to real estate. Nothing to talk about here, sideways in the range. Communications looks great. Look at the higher low that's possibly holding. It's very nuanced, but it's there. It's also over the previous all-time high. If we crack the hammer high and go higher, probably looking for longs and names in the communication sector. Google, Netflix, Meta. Probably not Netflix because they have earnings after the close on Thursday. Industrials. Same story. I mean, I'm going to sound like a broken record today, but I just don't see how we can be overly bearish after higher lows have been preserved over key technical levels pulling back from the highest high. As we move along to energy, there's really not much to talk about here. It's kind of a crapshoot. Such a lightweight sector. It was kind of interesting to talk about with the Middle East conflict a little bit. Is it going to apply a one-time price shock? It's just off the table. Energy rolling over here. The only thing you could kind of say about it is if this is a double top, watch your neckline. If we crack back into this range, it might be a slight downward pressure on inflation, which of course helps the case for everybody begging for lower rates at this point. Let's take a look at materials. I'll have some thoughts on that for you in a moment. The whole rate debacle. XLB, interesting pullback here. I think the more meaningful chart to look at is the XHB, which is going to be your home builders. Notice, and remember, we've been talking about this for a long time. As a double bottom, here's your neckline. This is just a Brigade bolt on the higher time frames, right? Are we going to hold here? Well, based on today's daily candle, I would think yes, right? Here is a look underneath, $100.50, close back inside of Tuesday's range. If that's going to be the higher low from the weekly, start looking for this to navigate higher. Why is this important? Cyclical side of the economy, right? So XHB is maybe worth a watch there. XLY, this is what I was saying when we were going through talking about the percentage point. I mean, once again, just the candle structure rules all. As long as we're over the top end of this balance, I have to maintain a little bit more of an optimistic and bullish stance, looking for upside. Don't get me wrong. If we take out today's lows, if we look something like this, I'll have to change my tone to being slightly more neutral or maybe even slightly bearish on the intraday day-to-day. But for now, the hammer closing back in Tuesday's range, do I sound like a broken record yet? Probably more bullish than bearish, right? Let's look at XLP. 80, bottom end of the range, stepping up for a hammer. If we bounce here, probably bullish, even if we get a rotation. Let's take a look at bonds are kind of interesting. I was really hoping for a fill in the group. We were looking at 80 puts on the TLT out to the end of August. There was a quick moment where they were worth about 50 cents at the very low of this move as soon as the initial headlines dropped about Powell being fired. And then that opportunity quickly evaporated. So in transparency, I did not get a fill at 50 cents on those contracts, although I'm still interested in whether or not we can sell puts on the TLT if this is going to continue lower. The CPI prints did not come in at a hot enough read to really pressure this lower. It would probably have to be an outside catalyst, more Trump-Powell drama if this is going to come back into play. So I'll be watching that. Utilities, nothing to talk about, midpoint of the range. Healthcare, midpoint of the range, nothing to talk about here. It's now the fifth heaviest weight sector. I think it's less than 10%. I think it's more like 9% of the weight now. If we look at XLF, beautiful hammer. I'm not even going to... Broken record, I know. there it is. Beautiful. Opportunity for a higher low, right? Bank earnings are mostly through at this point. So far, they've looked good. I really don't see any issues with this chart. Let's jump into the ratio grid and see what's happening from this point of view. Any red flags on the ratios? I would think that we still need better improvement out of this. We need better improvement over here. So let's not sugarcoat it. Things definitely could be better than they are, but I would just sort of caveat that by saying, okay, things aren't great, but is the market advancing to a brand new record high? Is the market doing this as we're dealing with lackluster ratios? No, the market's balancing. So is it a little bit more reasonable? Should we give the market a little bit of leeway as this chart, and this chart are still kind of figuring it out, so to speak? I think so. We're still having the XLK carry everything here, and we do not have risk off, and we do not have risk off creeping up. If we look at the specialized ratios, you'll see the same thing. Up, 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 just nothing bearish to say about this. And once again, if you flip this over to your Russell 1000, so IWD for, let's go backwards, IWF for growth and IWD for value. There we go. There you go. There's your uptrend. So all you have to do is move away from the Russell 2000 and get down into the Russell 1000, and you're still right back in the bullish throes of things with risk on. Let's go on over to the the B set, risk on off B. Gold definitely perked up throughout this entire debacle, but relative to the S&P ends the day flat. If we look at the Bitcoin chart, certainly the Saylor shift ratio continues to fire green. We have not seen a red shift here. Got a nice breakout and continuation, but the next step is really to look for, just maximize this sell real quick, go down to a daily. Yeah, let's go 4 hour because it's a futures chart. So ignore the Saylor shift. It's meant for a weekly analysis, but if we look back here, some of the places where I would think the next major retest long is just back at the breakout point, something closer to about 112, 275. I mean, we were taking longs back here around like the 108.5, 108.5 area. I would be willing to maybe add to Bitcoin if we start to break a little bit more firmly back below this. Let's say it turns into a short-term double top. Brigade bolt basically off the 112 becomes interesting on the daily, right? Here it is on the daily. Oops, let's get that tag out of the way. Something like this for continuation into blue sky territories again, right? Really the measured move on this Bitcoin chart is up closer to about 140. That's from this bull flag here. So still trying to navigate towards that target. And overall, it supports the idea that risk appetite, risk sentiment is still, elevated. Let's go back here to just also make note that the TLT ratio is moving lower, elevated risk appetite. If we look into the dollar, this is just kind of, I know we mentioned it in the intro, but here it is. Trump says that he's going to fire Powell. There's the dollar going straight down. And if we just bring this to a 15-minute chart on the 10-year, here's yields going straight up. So pretty much counterintuitive to what is going on there. And if you're like scratching your head, why? I thought they're trying to get someone in here to cut rates. You can't cut rates because the president wants you to cut rates as inflation remains elevated and totally wipe out any credibility that the Fed has left. So just for what it's worth, just total backwards. Everything about this situation is just so backwards. It's comical to watch intraday. I mean, there's nothing to really, in terms of trading it, you either just stay on the sidelines and just laugh, sit back, relax, and just realize, hey, I'm not going to get caught up in the chop. Or if you're willing to take risks in that environment, be my guest. If you look at the inverted ZT, we're pretty much flat over here. Nothing to say about that. Expectations for a Fed pause, probably still elevated for that next month. So let's go on out to the Fed watch tool. And exactly right. So 97.4% odds of a pause for the month of July, which is just going to be comical. Why is the Fed not lowering rates? Yada, yada, yada. Well, let me tell you why. If you take a look at the inflation rate, whether or not the news pundits say it or not, the core inflation rate year over year is a 2.9%, which is not the Fed's target of 2%, right? Sure, the month over month beat the expectation here, right? The actual was a 0.2 versus the 0.3 expected. Oh my God, big whoop, right? Until this number prints a 2, right? It's not to say that the Fed can't ease rates a little bit. Obviously, there's such thing as a real rate as inflation comes down a little bit and the Fed maintains neutral. The real rate is increasing technically. I'm not oblivious to that fact. But the pause or maybe like a single rate cut, 25 basis points, that seems much more reasonable than the calls for like drop rates to 0 right now. That's just totally uncalled for with a CPI that looks like this. PPI, a little bit better. This one to me is a bit more telling. This is the month over month. The reason I think that this is telling is because the producer side, obviously, is going to have a lot more carry forward impact from the whole tariff debacle. And seeing this is actually quite, promising in terms of perhaps not really getting a huge one-time price shock to inflation. So we shall see. It's yet to be determined. I guarantee you in the Fed FOMC press conference on the 30th, Jerome Powell will say, hey, one report doesn't make a trend, right? I can guarantee that's basically the words that'll come out of his mouth. You could still see the PPI year over year down here at a 2.3 and the core year over year at a 2.6. So even on the producer side, still not down towards that 2% target. If you take a look at the actual reading of inflation here, one thing I find compelling, and something that I know we sort of like toe the line when we start giving opinions and thoughts on Powell and Trump, and everybody's got their own opinion, and that's fine. Obviously, the market opinion is the only opinion that matters when it comes to making money. So I think that that's the baseline that unites us all. An opinion that I have on inflation is that shelter is going to act as an anchor and probably prevent any major tariff one-time price shocks from causing sustained upward pressure on inflation. Why would I say that? Because shelter represents roughly, don't quote me on this, but at this point, it's like 50% basically of the CPI print. It's, again, not exactly 50%, but it's roughly half, plus or minus 10 on either side, right? It's definitely not 60%, so probably minus 10. Between 40 and 50% is attributed to shelter. And you can see clearly that we had a downtick on shelter inflation on the month over month. Now, if you annualize shelter, a 3.8 certainly is not 2%. So you could build that argument and say that there's still work to be done on the shelter side of things. But at least during the tariff holding period, if you will, you're not seeing that really acting as a contributing factor to the inflation number. If we take a look at the PPI side of things, let me zoom in on this. It's a little small, huh? Let's zoom in on this. Excuse me. The producer side, I think the most important thing to call out here is that the services side is deflationary, right? And services makes up, a majority of the economy currently, for the US at least. And as long as services is down, I don't really think it's going to translate to a huge uptick in the CPI print for the next go around, basically. So we're in that sweet spot where the Fed has outlined in the beige book that businesses anticipate passing along price increases within a 3-month window from April. We're sort of starting to get that data right now. PPI kind of looks okay, right? So Powell might have some explaining to do in terms of like, hey, the real rate is like getting a little out of hand as inflation continues to come down, but you're not doing anything. Can we at least get a 25 basis point cut? That might be a reasonable ask. But like, hey, you should slam rates to zero. Totally unreasonable. Let's get back on over to the calendar here. What else is happening? Excuse me. Out of breath here, doing too much talking today. As we look at the Thursday session, we do have retail sales jobless claims tomorrow morning. Jobless claims will be a big one. Another sort of component, ammunition, if you will, for Jerome Powell to say, like, we don't need to lower rates is just because the labor market remains fine. We've seen a consistent miss week over week on the initial jobless claims. So we'll watch out for that trend to maybe continue tomorrow. Even if we just stabilize in here around 230, it's not at a point where Powell needs to cut rates to save the labor market. So that's a kind of invalid argument there. Some more Fed speak to end out the Thursday session. Then the next big thing to watch out for, of course, is Friday. Preliminary University of Michigan numbers, consumer sentiment, and inflation expectations. Always volatile, always a market mover. Be aware of that Friday morning, 10 o'clock. Let's take a look at the earnings calendar. ASML reported before the open today, and once again, not really a great forecast there for 2026, quoting that they're unsure if it's going to be a profitable year or a growth year. I can't remember what term exactly they used, but obviously the market didn't like it. ASML gapped down big today. Bank of America reported, so all the big banks are out of the way now. Most of them are non-issues, if you will. JP Morgan's in the rearview mirror, BlackRock, State Street, all these names. TSM is the top watch. I think we've already talked about that when we were looking at the SMH chart. So that is the main focus for tomorrow morning, to see if it derails any of the bullish thesis, to see how much pressure, if any pressure at all, it puts to the downside into the broad market. Netflix, might be worth a watch. It's kind of turned into more of a swing trader these days. It's very difficult to day trade Netflix, I've found at least. Interactive brokers, I'm pleased to report today was kind of the first day I actually had some active trades firing off on interactive brokers. We just moved over after the Friday outage on Thinkorswim, which, in my view, almost unacceptable with how beautiful the NVIDIA setup is, or was, I should say. Can't harp on it. Loving interactive brokers. First experience, very, very fast to fill. Does not have that same lagging sensation as Thinkorswim. So I'll continue to test it out going forward. Today it was awesome. Worked fantastic on Robinhood. So as in trading Robinhood, not actually trading on the platform Robinhood. Don't get me wrong. We're never going to Robinhood. All right. We could trade Robinhood, the stock, the ticker, not trading on Robinhood. Interactive brokers, great experience so far this morning. So who knows? Maybe we'll start watching their earnings as we fuel them with commissions straight out of the account. Let's take a look at, that's it on the earnings calendar. Let's get back on over to the platform here and finish up our watch through the additional evidence. All I would call out on the longer end of the curve is that the market's still kind of indicating some concern about inflation here. So it doesn't matter how you feel about, again, the drama between Fed chair and president. It doesn't matter. The market's opinion is the only opinion that matters when it comes to making money. And the longer end of the curve creeping higher would just indicate, hey, with number one, some of this uncertainty that we're now dealing with, and number two, the tariff thing that we're still trying to resolve, maybe there is going to be some inflation uptick that we're seeing here, especially if we get a, let's just say, hypothetically, the Fed chair is booted out and someone new goes in and they do exactly as requested and bring rates down to zero. You're probably dealing with inflation, and the longer end of the curve would have to move higher to combat that. So I'm watching this breakout level very closely. It hasn't broken out yet, but it's something to keep tabs on. Let's move along here and take a look at the credit spreads, see what's happening from this perspective. Small upticks, but they're just counter trend moves. In overall downtrends, it still would indicate risk appetite is strong and healthy. If you look at junk bonds in isolation, let's take a look at the, you could also use actually the LQD here. I think this is a fine illustration. I'm going to duplicate this trend line real quick and just drag this out to indicate the lower highs as well. But now let's throw in the SPX, and what you'll see here is that we are still offering a slight, very slight bearish divergence on junk bonds, right? You can see the lower lows still coming in, whereas we have higher lows in the S&P. Once again, not enough of a data point to go out and say, let's short the S&P 500 with both hands, but it might just mean if the HYG is weak, if TSM earnings come in poorly, if SMH starts to break down, if IWM does not clear its key hurdle, maybe we're just not very aggressive on the long side in the S&P, even after all of the analysis we've conducted thus far, right? So that's a little warning shot across the bow. Let's look at breadth. Let's jump into our daily charts instead of the weeklies. I would just really caution you to watch the new highs versus lows at the zero line. Again, not enough to say let's short the S&P outright, but a little contraction in breadth as the market maybe tries to make an attempt back towards the highs is certainly noteworthy. If this does make new lows as the market's trying to make new highs, of course we would see this in the RSP as well. Again, it's just a small concern. It's a small warning shot across the bow to not get over leveraged long into blue sky territories without a very well-defined stop loss. If you have a well-defined stop and you think it's worth the intraday trade, then that's fine. But if you don't have a stop, if you're just sort of like throwing darts up here at all-time highs, this is not really on your side, right? Lower high here in the RSP. Again, not the end of the world. You can see the closure back over this Monday low from back, that was 2 weeks ago. Or sorry, not 2 weeks ago, but literally last Monday. So not the end of the world, but small warning shot. You can see the same thing in the QQQE. Equal weight NASDAQ right back over here, closing just a hair over that previous Monday low. Let's jump into our volatility, and then we'll get into the core list. We'll wrap this thing up. You can see that we've got an upper wick just telling you that market participants faded the entire, drama saga there, if you will. You can see the same thing in the VVIX, large upper wick closing back down here inside of what I would consider just a little range. So volatility is pretty comfortable. We did have a VIX expiration today, which is just volatility futures expiring. We've rolled the contracts for the study up here. We're still in a deep contango through the top three expirations, but then the fourth is in a very mild backwardation. It's not enough to make me bearish, and the distance here in the spread definitely more bullish than bearish. Gung-ho in terms of risk managers allocating capital. If we think about 9 versus 30 days, still in a contango there, and even the one-day VIX, a small pop to the upside, but nothing meaningful enough to really get this off the floor in a way where I would say, hey, heads up, something's going on behind the scenes. You're not seeing it here in the one day. Let's take a look over through the core list of companies. Let me just give this a little refresh so it's on the clean chart set. There we go. NVIDIA. What do we see on NVIDIA? It's probably a decent watch. The daily chart looks a little funky here. I know, just because it's been like straight up. Lockout rally on the news, right? H20 sales resuming in China. 2-day balance range. If we can Brigade bolt out of this, again, keep in mind on all semiconductor names that we talk about today, TSM sympathy, probably a real thing. If TSM gaps down, we're probably not talking about longing NVIDIA over the top end of the 2-day balance. We're probably talking about maybe some kind of pullback to close the gap. But at face value, outside of TSM earnings, this is a nice hammer that looked underneath prior day's low after the gap up, so no sell-side conviction through the thin structure. If we can Brigade bolt the blue sky territories, let's look for upside, trades. It's really that simple. So there's two ways to deal with it. Either you're in range and it's a patience play until this, or you open on a gap up, it fades, supports 171.60, and it's a long here back to the overnight high. This is from the gap up on Tuesday, and then beyond, blue sky territories, right? If it's into the gap below, I wouldn't really stab short here. I would really be looking for, can we support over 167.50? If we could support here like this, then you would try longs here to navigate back up towards the highs. Think about the risk and then reward like that, right? Let's move into Microsoft. Microsoft has gotten a little sloppy here. We had a technical level here today, a lot of disrespect for that level. So for now, I'm just kind of like monitoring whether or not it's going to make an attempt at brand new all-time highs. If it's just chopping around in here, it's not bearish, but I just don't think there's a trade to actually participate in that range. Let's take a look at Apple. Timmy Apple. Daily chart still looks good. I don't think we want to lose sight of this. Still lows, higher lows, higher lows. We've been tracking this for, geez, it feels like weeks now. I know it's just literally like a week and a half in this box, but the concept is still there. It's trying to build out the stair steps. I would only really start to get involved when the alert goes off up and over 213. Right? This higher low is fine, but technically speaking, you're still inside of this major balance range. I only want to get involved when and if we're clearly getting confidence over 213, and even at that, Apple is, typically a slug unless there's a catalyst. Let's move along to Amazon, another one that's been a little bit disappointing recently, just in terms of its intraday action. You could see in here very small hourly candles relative to what we had back here when there were some nice trending moves on Amazon. So, we don't want to attach too many emotional labels, so to speak, to these things. I would not like this Brigade bullet short. You're just trading into a choppy zone. Maybe something that looks like this, but the evidence, the proof is in the pudding. Unless there's maybe a catalyst, Jeff over there has been selling millions. I think the most recent number was like 7 million shares. As long as that sell side pressure is there, it's very, very hard to get any kind of upside momentum out of Amazon. So I like the technical setup for if it does want to unfold like this, but in terms of execution, probably just manage expectations. Be a low expectation that this is going to do like a high flying move to the upside. Let's take a look at Google. Google has got this very well-defined 2-day high. You could see it here on the daily chart as well. The only issue is you're already at resistance, basically. Previous resistance from this range back here. So is Google a player? Probably not. By the time a setup even unfolds, you're probably talking about 25 cents left on the bone. I mean, what are you going to do? You're going to go risk reward into that level? No. So Google's kind of like that ship has sailed. Maybe if it pulls back deeper, you could get the attempt off of 180.75 to go there. It's a possibility, but it's kind of slim pickings out there in terms of actionable setups that are in force. Meta 705, good for about, again, 15 minutes, 20 minutes, 30 minutes intraday off of the 705 first attempt, 5-minute inverted head and shoulders there. But aside from that, into the afternoon, lower. The only thing I would say about Meta is I would be willing, more so than Amazon, I would be willing to do this. If we can Brigade bolt back over 705.50, I would give it a second attempt over that level to trade into 714.50 for a long. So daily pullback really on the daily into the top end of this breakout range, right? This. And if we overshoot, come back above, thin structure here-ish, thin structure here to retrace back on the upswing. And the target still has to be 714.50. You can't really, you can't be just like, oh, I think it's going to go to all-time highs. That's a bit much, maybe from a swing perspective, but total different ballgame, right? You'd have to be trading this off the daily. There's not really a daily setup here yet. You're still technically underneath the neckline of what would be the double top, right? So scalp, maybe. Longer term trade probably needs to show and prove back over 714.50, and then you could maybe establish like risk reward to blue sky territory, something along those lines. Anyways, moving along to Tesla, kind of a cluster explicative in this moving average cluster, if you will, maybe over 323. The reason I don't like that all that much is because you have this previous range back here. When I said a second ago, like it's slim pickings, I really mean it. Like you could try it if you really want. You could try it. I just don't think it's going to be the cleanest trade to unfold through here. The best trade on Tesla is back over 334, something that unlocks this, right? It's been a grind. It's been a grind out there in Tesla. Let's take a look at JP Morgan, just from an earnings perspective to understand financials. No, like look at earnings. Look at no change, no major gap, still over the previous all-time high. Maybe you could make the argument for double top is setting up. Maybe if you're under the neckline, you get interested back towards here, 270s. But for now, just nothing bearish to say about it other than consolidation over previous all-time high. That's bullish in my view. If we look at Netflix earnings on Thursday after the close, so tomorrow, I mean, the setup here is technically bearish on the failure back below 1260, right? Failing this previous high to turn it into support. This would have been ideal for buyers. You're not really seeing that. So my first thought is maybe a break of the trend line sends it lower towards this 1183, but with earnings, it's unfortunately just a hard pass. There's nothing to do about it from an options perspective until we're through the actual announcement. Palantir, you can see I've got a couple of alerts on. Look at the daily chart. Nice strong close up here towards the highs over the inverted hammer high. If we take a look at the hourly chart here, I would love to see a couple things on Palantir. Either a gap up, pull back long off of 150.50, open in range, higher lows start to build out over 149.15, Brigade Bolt over 150.50. Blue sky territories above. If it really pulls back to 145.50, I would also try longs off of that. Something like this, back to the upside, right? So Palantir is one of the names that actually does have a decent enough setup to probably have as a priority. So it's NVIDIA and it's Meta and it's Palantir so far. Broadcom's going to be susceptible to TSM earnings, of course. Setup here is a Brigade Bolt over today's high, Monday's high. Tuesday's high. I'm getting my days confused here. Over Tuesday's high, 282.75. Then we start to rock and roll. If we're just neutral through here, it's exactly that. It's probably bullish though, over 277.50. I would not change my tone to being bearish on Broadcom until we're either back in the range and breaking 271.35. Right, that's got to be it. If we look at AMD, it's been a high flyer, just an absolute monster, upgraded by Wells Fargo this morning. Probably should have known better to not expect like a full move into the gap on the upgrade. Just very difficult with that morning volatility out of the ESNQ, given sort of the drama, so to speak. Consolidation in here is undeniably bullish. Brigade Bolt's over 158.85. Next upside level 166.65. If it does dip a toe into the gap, I would love to see this. I just don't know that we get it. Look at this 3-day range here. Off the lows, off the lows, off the lows. Never officially closed the gap all the way. This is a larger gap, so has more of an opportunity to fill a little bit more, but just generally noting that AMD has been a really strong name with upgrades, probably worth continuing to keep a bullish stance on, looking for those rotations. If it does do something along these lines, I'd be interested as well. On the hourly chart, you don't really learn a whole lot with just a straight up move here into the afternoon. So either consolidation and go, mild pullback, and then Brigade Bolt out of the range. I would want to see this hold at 156.75. If we dip a toe into the gap, come back out, it's this long here, risk, reward, right? That's the core list of companies. Let's get into a couple of these ideas. There's only a few. MSTR, MicroStrategy, has to be a watch considering what Bitcoin is doing. Look at the balance range. It's 1, 2, 3 days worth of balance. If we break up and over 455, that's where I think we have longs, and your next target overhead is this at 477.85. 477.85. 3-day balance range break. It's a little bit more than a range double, but that's the idea. Something along these lines. Obviously, Bitcoin would be a huge tailwind for this if it can move in the upward direction and hold some of the pullback that it's sort of developed thus far. If this breaks underneath, I would also consider longs on MicroStrategy, or just strategy now these days, at 422.25. If we could get this, great. That's a daily higher low shipment right there. DHL, show up at my doorstep. There you have it. That's MicroStrategy. Next up, Robinhood. Great trades on this today with the group. Just very, very clean. Right over the 3-day balance range. High blue sky territory. So it's you no longer have a 3-day balance. The reason that today's trade was probably a little bit more lucrative was, number one, it's a multi-day range, and then number two, you had a little bit of catalyst in terms of the tokenization stuff. There was some chit chat about where the bill is in terms of has to do with the stable coins that the Genius Act was sort of allowing for, right? So regardless, knowing that there's some sort of fundamental backdrop, some sort of bullish catalyst behind it, a 3-day, let's zoom back in, a 3-day balance range, you're going to have your best break when there's multiple days of consolidation. Now there's just 1 day of consolidation near these highs. So don't get me wrong, it's still bullish via some sort of like ascending triangle here, but maybe just manage expectations a little bit in terms of not as firm of a breakout as what we had today. So 104.25 would be that key level, right? That's Robinhood. I probably would not be interested if it just drops back down into this range. I would just pass on Robinhood there. Next up is going to be Oracle. Oracle and Larry Ellison are just absolute monster here. Another one that's just for the books. It probably made more sense on Oracle. And, this is a good reason to have a long-term portfolio in the first place. But if you were to just have swung trade this, right, you're probably making more money than trying to just find little setups intraday and take a couple points out of it. Regardless, that's still like the bread and butter of like active cash flow. But if we could get this, like pullback holds over 237.75, if you could get pullbacks to here, we'd be fishing for longs at that level again at 230.40. Just a beauty of a stock. And if it does set up something intraday, we want to be prepared to potentially catch it. Today, a little bit random, just from the middle of nowhere, getting this breakout, but nonetheless, still overall a bullish looking chart. That's Oracle. Next up is Circle, and then that is going to be our fourth. And then I said I had 5 for you, so we'll get into the 5th one last, of course, inherently. Nice upside here. Obviously, again, think about the same concept of this tokenization and the stablecoin stuff. I think it's very important, especially dealing with this bill and kind of what's going on right now. You have to parse out MicroStrategy, MSTR, from the other names that are going to benefit more from the tokenization stuff. So think Coinbase over here, think Robinhood in terms of commissions on their, fractional, hey, you can invest in SpaceX. And that ended up being a little bit of a, that backfired a bit, right? To say the least. And then Circle, right? Circle, of course, being the major player in the space. So as this breakout takes place, again, just understand that this is more about legislation and tokenization, and this is more about Bitcoin and whether or not Bitcoin is actively breaking out and seeking upside continuation. So Circle, as long as the news headlines and the news flow remains positive around what's happening with that bill, you could go 224 pullbacks, you could go 209.50 pullbacks, then ultimately target this 247.50. If we go to the daily chart, you can see this here, right? It's these highs, and then beyond that, what do we actually have at the tippity top? Got a couple of different tiers up here in terms of major levels. Let's just make this one nice round number, 293. You guys know the deal. Round number is only up in the penthouse, and then we'll just go, say 85 works for me. That's good enough. We'll dim it back, though, to gray, and that would be another upside potential target there from the hourly. So main ideas, this consolidation bullish, looking for the full target. This even better, much more interested in 209.50 pullbacks, back to 247.50. And then beyond that, walk up the upside targets. The only caveat I'll say with Circle is outside of playing it with just shares outright, the options chain on this thing is almost untradeable. Right? If we just open this up, the weeklies here, look at the spread on this. You're taking about, just if you were to think of this as like $1 spread on the at the money call, I mean, if you just mark it in and mark it out, you're taking a 10% hit to your position, right? Immediately, just by using market orders. So please understand, if you are going to trade Circle via options, probably needs to be a larger move. You probably can't just scalp this for like, hey, I'm going to hold it for 2 minutes and then try to get out of it. Unless that 2-minute bar is like a massive breaking bar to the upside, probably very difficult to navigate that via options. So shares are always, kind of a good fallback, a no-brainer, if you will. Shares are just what they are on a stock that's been moving. What's the range of today's session? Today's range, 38.38, literally right here, 38.38. So a $200 stock that's moving $40 in a day, you could do some damage if you just grab a couple hundred shares, right? And that is A-okay. So Circle. Talked probably too much about that. Let's move into the final idea. It's a lower tier watch, but ROKU is absolutely on watch here over this 91.35. You can see we have upside above that level, right? You got a 5-day balance range now. It's a little bit of a slower mover. It's probably not as attractive as some of the others, but if you can crack it, you're trading through some of this thin structure up here. So ROKU over 91.35. All right, if we can get that Brigade bolt looking interesting. Here it is on the hourly. You can see the grind. So again, manage expectations on it, but that's probably what we're dealing with in the upward direction. All right, that is what I've got for you in today's episode of the Midweek Market Update. If you enjoyed the video or learned anything new, as always, feel free to drop a comment down below or give the video a very simple thumbs up. We will be live, as we always are, every single day, 8 o'clock Eastern Time, up in the penthouse office. We'll see you there tomorrow morning for our retail sales and the jobless claims. It's live, it's free, it's right here on the channel. If you are interested in this type of analysis every single day, let me just bring this over. You want to come hang out with the live squawkers? We literally did all of this analysis before I recorded the video. You can pause the video, you can read some of these comments, it's the same thing, right? If you want to see, this is the pre-market plan, the whole 9 yards. If you want this stuff every single day, you don't just want it Saturday and you don't just want it on the Wednesday afternoon, you can come hang out with us. If not, that's totally cool. We'll keep doing the pre-market prep as well with the entirety of the penthouse office. All right, that's all I've got for you in today's episode. Have yourself a green trading week, and as always, I will see you in the next one.